Hey everybody, it's Brett again here with Buckeye Dealership Consulting, and today I'm going to be covering the topic of Collateral Protection Insurance, or CPI, with everyone. For those of you who are using it already, I think you would agree that it is probably the most valuable product that a buy here, pay here dealership, with or without, a related finance company, can and should be taking advantage of. But before we go into CPI too much, let's just talk about car insurance first. Most of you are requiring full coverage insurance 100% of the time at the point of sale. At this point in the business, you've learned that the clients maintaining their full coverage insurance can be unreliable at best. Some of you may have collectors chasing car insurance, or working on trying to keep your insurance penetration up. I know some dealers like myself, who we had a dedicated person whose only job was to chase car insurance and try and help to maintain people getting that full coverage insurance to protect our vehicles. And essentially what you're doing is you're taking your employees' time and having them work as insurance agents and sending that money to somebody else. So what CPI is it's a way to accomplish the full coverage portion of what you require to protect your vehicles. It's just a better way to account for it. It's a better way to do it, and that's what we're going to talk about today. So getting into CPI as a whole, the trick is what we want to do with CPI is we want to break the cycle, right? We want to increase our insurance penetrations. We want to reduce the amount of time that we're spending chasing car insurance, or worrying about what is our real percentage of uninsured vehicles currently on the road. If you ask anybody right now, you'd be guessing. So this is a good way to know exactly where you're at and to monitor it. And it also has the potential to create an additional revenue stream for your dealership. So how does CPI do that? What is it? CPI is Collateral Protection Insurance, or the physical damage portion of full coverage. So it is the way for you to make sure that the car is protected from physical damage up to and including a total loss, which is important, obviously. That's why we protect our cars, because it happens and it costs the dealerships money. So how it works is you are basically, as the dealership or as the finance company, taking a policy out on your car to make sure that it's protected from damage or total loss. You are able to, using CPI, to ask the customer to reimburse you for that expense if they should decide to. If they decide to enroll in the program because they either can't get full coverage insurance at the time of sale, or maybe it's too expensive, or, as you know, a lot of you, the startup costs for car insurance, especially full coverage for some of your customers, can be very expensive. Where does that money typically come from? It comes from your down payments. So if you had a way to have an accurate percentage of how many of your cars are actually covered, if you had an affordable way for your customers to pay for that insurance, and if you had the potential to make some extra money while also reducing your losses, would you take advantage of it? I bet a lot of you would. So that's what we're going to talk about now, is the collection portion. The way that you collect for CPI is very similar to how you're collecting your payments, which should be simple because we're already in the collections business. So with CPI, what you're going to do is, at the time of sale, the customer is going to fill out paperwork. They're going to acknowledge, yes, they know they need full coverage insurance, and they're going to acknowledge that if they can't provide that insurance, then they have the option to enroll into your CPI program. Once they do, and most of them will choose that, you are going to then collect the premium dollars for that. Somewhere in the $80 to $90 range seems to be pretty typical. And it's going to be collected at the same way that you do their payments. So for most of you, let's assume it's bi-weekly. So now you're talking about $40 to $45, maybe $50 every 2 weeks you're going to collect from them. At this time, you're going to take all that money from all the people enrolled in the program, and we're going to move it aside to that reinsurance company that we talked about last week. That money is going to sit there in that reinsurance company where it waits to pay claims on your total losses or your physical damage. So remember, it's not just total losses. It's also maybe the guy comes up to pay his bill and you see that the car's swiped down the side. What's the likelihood that that car is going to stay on the road? Would it be beneficial to you to maybe repair that car? Or to, at this time, be able to absorb some of those losses and put that good paying customer into another car? CPI allows you all of these options. Now, as you're collecting those premium dollars, and again, they sit in your reinsurance company waiting to pay claims, you're saying to yourself, now what? Now I've got a total loss and the car's wrecked. What do I do? With CPI, you're essentially filing the claim for yourself. So you're going to take, in most instances, let's just make it easy, you're going to take NADA wholesale and NADA retail, and what's the average? So if you got a car that's a $4,000 wholesale, $6,000 retail, your claim that you're going to file against your own reinsurance company is $5,000. That took about 30 seconds. So there's no more arguing with the insurance company about the value, sending book outs, waiting weeks on weeks to get that claim so that you can make that initial loan whole. And you're all doing this at the expense of the customer and at the expense of your portfolio. So wouldn't it be better if you had a way to collect that premium, move it to your reinsurance company, in the event of a total loss, file a claim against that loss so that you don't have to just charge it off, make the process quicker and easier for your good paying customer, put them into a new car, and get them back out on the road and paying you on time again every 2 weeks while enrolling in your reinsurance program again. This is why CPI is an absolute no-brainer for anybody in the buy here, pay here industry. So we talked about claims. The other thing that we talked about is, let's say, for example, you started CPI today and you've got 1,000 notes, but you know that maybe 200-300 of those people currently don't have full coverage insurance for one reason or another. They just let it lapse and they pay good, so you're letting them get away with it. Maybe they can't afford it because their budget's tight. What about sending a letter to all those people or communicating with all those people and saying, hey, you know full coverage is required. You signed a piece of paper when you bought the car saying it was required. Now I've got a better option for you. How would you like to enroll into our CPI program? And now you have the ability to enroll people midterm. So that means even if a person has full coverage insurance and then 6 months from now it lapses, you can enroll them into this program, keep your car insured, right? Raise your insurance penetration, generate more revenue potentially in your reinsurance company where it sits to pay claims, and keep that customer on the road and protecting yourself in the event of a total loss. So these are kind of all the working parts of CPI, in a video 10 minutes or less. I'm sure you're going to have a lot more questions about it. I'm happy to answer those questions. I'm happy to put you in contact with some other dealers who maybe are already implementing CPI rather, so you don't have to take our word for it. One of the other things is when you do something like this with CPI, you may think, yeah, but what does it take to get set up? All the documents, the enrollment forms, the midterm placement forms, scripts for your collectors, all the things that you're going to need to keep you compliant and to make sure the customer understands what they're enrolling in are all going to be provided for you by Buckeye. So it's the training, it's the paperwork, it's helping your staff, it's all things encompassing CPI so that we can help you to have a successful program. And again, what we're trying to do is save down payment, lower your cash and deal, increase your insurance penetration, reduce your losses, and at the same time, generate an additional revenue stream using your reinsurance company where you get to participate in the profit remaining. So it's definitely something to think about. I'm looking forward to hearing your questions and having a conversation amongst ourselves. And here shortly, I'll be posting another video. We're going to talk about GAP as an option in the buy here, pay here space as well, which some of you, there's more than one way to take advantage of that. So look forward to that here coming up soon. And you guys have a good day. Thanks.